Well, for more on the trade war and its implications, we're joined by Robert Moran. He's a partner at the Brunswick Group in Washington, D.C. Welcome, Robert.
Thank you.
So let's start with how you see this playing out in terms of the short term versus the longer term.
Well, it's interesting. Something like this happened in 1890, fascinatingly enough. It was called the McKinley Tariff Act. It passed with a Republican Congress and a Republican president. It was so unpopular, it led to their defeats in 1892, and by 1892, there was a Democratic Congress and a Democratic president, Grover Cleveland, interestingly enough. So they say that history may not repeat itself, but it certainly rhymes. In the short run, I think we're still waiting to find out where the pain is and where the pain isn't. In recent polling, 17% of Americans say that their financial situation has somehow been impacted by this in a bad way. 6% say it's been good for them.
Right.
In the long run, we'll see. In the long run, as some of the costs might get fed through the system and you get some dislocations, I could see this becoming more unpopular. Right now, it's very close in American public opinion.
Because even though it's continuously in the news cycles, a lot of people perhaps aren't feeling the pinch in their pocketbooks,
Right.
at least not yet. When do you think they might start seeing that?
All this would have to ripple through the economy. I mean, here's the thing. We know from polling that 82% of Americans have followed this story. That is a very big story. And the media has been doing a good job of reporting on it, just like y'all, about all the different aspects of it. So we know Americans are paying attention. Right now, Americans are split on this. 41% support Trump trade policies, 42% oppose Trump trade policies. 49% think these tariffs will be bad for America. 40% think they'll be good. This strikes me as bad economics, bad national politics, but for Mr. Trump, possibly good local electoral politics. We'll have to see how this starts to worm its way into the price of goods and services Americans feel. If the economy continues to improve because of domestic growth, They might not feel it right away. It depends on where that goes.
Now, obviously, this ripples beyond just U.S. and Chinese companies. So what are businesses doing to really shore up their positions at the moment?
Well, so much of this is about what your supply chain looks like and if you have options. The fascinating thing about this is I heard Secretary Ross talk about this at the press club several months ago. And he went into a lot of detail about where these goods are coming from and the ability of all the different trading partners to find offsets for those goods. He seemed to have convinced himself that this was a winnable trade war. I don't think trade wars are winnable. The question then becomes, for example, in a U.S. China trade war, Brazil becomes one of the most important sort of swing countries as a supplier. Does Brazil create enough agricultural products to then support the Chinese market and offset American producers? I think that's very much an open question. Do Latin American countries that are very rich in agricultural products, can they offset some of the things that are then in decline from the U.S. supplier?
Now, you raise an interesting point, because if the trade war does get resolved and they've now established these new global supply chains, what happens to them? Are they now forever changed?
That is a very good question. So my guess is in every major corporation, multinational, you have supply chain experts that manage their supply chains, understand. This is especially true with American retailers. You also then have all of the shipping and shipping-related interests and all of those individuals who are experts on moving goods and services around the world. I think the number one takeaway from this is that globalization, as people have thought about it in the past, is maybe not a sure thing in the future, or its acceleration is not a sure thing in the future, and that everybody in the supply chain world and the shipping world needs to have sort of backup strategies,
right,
and contingency plans. And I'm not so sure that as many people did in the recent past, because they just assumed that trade barriers were, like most of us, that trade barriers would continue to fall. If that assumption does not hold, well then I think we've all learned an important point about having your options open.
And speaking of options, we know that there are a lot of different trade negotiations on the table right now that the U.S. is involved with. If you had to keep an eye on just one in the short term, what should we be paying the most attention to?
Well, for me, it's the U.S. China relationship, number one by far, just because it's the two largest economies on the planet, who, by the way, are heavily intertwined. and any trade war becomes a big mess. I think I would have said the U.S.-EU trade negotiation. The problem is, I think almost every observer was sort of whipsawed by what actually occurred, where the president talked up tariffs and trade barriers, and then all of a sudden started talking like a big free trader. It was quite a gyration. I think we also have to look at what happens with Korea and the Korean economy in regards to all this too. That's a huge U.S. trading partner and a large Chinese trading partner, and how that works out, I think, is a very big open issue for all of us.
Certainly a lot of collateral damage at stake.
Yes.
Thank you. Always good to have you on. Robert Moran there, partner at the Brunswick Group.